We have met the research people at the SEC, the Bitcoin and crypto research people. They know what they're talking about. They are really smart. The head of FinHub, who reports to Chairman Gensler, is really smart. She's a scientist by background and just really understands what blockchain technology, Bitcoin is all about. So I think he's got great research.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discuss about Bitcoin and market. Cathie Wood says, blockchain ETF Ark is currently on the waiting list. Black R is there are many players waiting, and nobody seems to understand what's going on. I just saw the other day when Gensler questioned the Congress, saying, man, just do something you know. But what's going on there? We've met the research staff at the SEC, the Bitcoin and cryptocurrency research staff, and they know what they're talking about and are really smart. We've also met the head of FinHub, who, Gary Gensler personally, I believe it has been political. He reportedly wants to be the Secretary of the Treasury. What does the Treasury do? What is its mandate? It has crossed our minds that he would prefer a central bank currency rather than Bitcoin. But the SEC approved a Bitcoin futures ETF, which actually has counterparty risk, whereas a Bitcoin spot ETF would have no counterparty risk. Ours, for example, would be backed by Bitcoin in cold storage at Coinbase. Where there is no counterparty risk, Bitcoin futures ETF would. And that's why the SEC lost the Gray case, and lots of things Cathie would discuss, so please watch the video to end. And like, share, subscribe our channel Everyday Finance. Thanks.
And just if I can say, we learned a lot about the person, Elon Musk, during that time. I think he is he has obviously very high standards. He's a very tough boss and taskmaster, but he is a good person. He is a really good person. And, a lot of people think that he might be arrogant. I don't think so at all. When he respects people, he will say to them, as he said to us then, he said, look, the most important thing you can do for me, when we thanked him for doing the interview, is, if you see that we are making a mistake somehow in terms of our go-to-market or whatever, tell us. We will listen to you. We will listen to the feedback. And that he means it, because he monitors Twitter, and certainly in the early days he did, to see what might be going wrong with his cars. So he's a good person, and obviously brilliant and thoughtful. We have met the research people at the SEC, the Bitcoin and crypto research people. They know what they're talking about. They are really smart. The head of FinHub, who reports to Chairman Gensler, is really smart. She's a scientist by background and just really understands what blockchain technology, Bitcoin is all about. So I think he's got great research. I think this is Gary Gensler. Personally, I think it's been political. Rumor has it, he would like to be Treasury Secretary. What does the Treasury look over? What is its mandate? One of its most important mandates is the sanctity of the US dollar. So could it be, that he would prefer a central bank currency as opposed to Bitcoin? That has gone through our minds. But when the SEC approved a Bitcoin futures ETF, which actually has counterparty risk, a Bitcoin spot ETF would have no counterparty risk. Ours, for example, would be backed by Bitcoin in cold storage at Coinbase. No counterparty risk there. Bitcoin futures ETF? What? That's why the SEC lost the grayscale case. So I think this is more about Gary Gensler.
Got it.
And maybe his political ambitions. But I think the judicial branch of our government, the legislative branch of our government, is in our checks and balances system. That's what makes America great in a way. It often puts us in gridlock, but there are checks and balances. And he really is appointed by the executive branch, and these other two branches are now weighing in. And he is beginning to call the Bitcoin ETF his personal Vietnam, which means it's a problem that he needs to get out of it. I think he's now even backed away and said, well, I'm not the only decision maker here.
Right.
There are 5 of us. and so forth. So we think there's movement on the way and that it will happen. I think they'll approve a number at the same time because the history of ETFs is the ETF that gets there first will have the most liquidity and will gather most of the assets. Even in the gold example, the second one in line, I think its fee structure is half still the first one, and it has not been able to gain traction. Nothing like the GLD. I think the SEC, they'd be picking a winner if they picked just one. It's going to end up being a marketing war, if I might say, or battle. You know, of course, we're hoping, I don't know if you know this, but 21 Shares is our partner. 21 Shares is based in Switzerland. It is the largest crypto ETP provider in the world, more than $1 billion in AUM. So its infrastructure and regulatory network are fantastic. We're leveraging off of those. They're leveraging off of our research, active management, and our brand, certainly in the United States. We hope that our research, which we started, our first Bitcoin paper was in 2015. And the question was, can it serve as the three roles of money? And we did that in collaboration with Art Laffer, who is so excited about Bitcoin.
Right.
83 years old, a monetary scholar. And he said to me back then, when we wrote that paper with him, he said, I've been waiting for this since the US closed the gold window, since monetary policy became unhinged. This is what I've been waiting for, a rules-based monetary system. And this is global, it's digital, it's private, no human intervention. This is amazing. So he thinks that it is the first sign that we could be going back to a time pre-Fed, so pre-1913, of private money's competing against one another. And he thinks that will bring real discipline into the system, back into the system, and will represent a leap for freedom from some of the, he would suggest, hostile monetary policies that have taken the dollar down by 98% since the Fed started. I think it's going to be an election year issue. There are real proponents, and then there are those who are saying, stay away from this. You know, this will take away the US dollar's role as the reserve currency of the world. So you have that battle going on. You have younger people really supportive. You have people like me with an economics background, really even more important, much more important, like Art Laffer out there now starting to evangelize for this. As I said, Art is 83. He's seen a lot of economic history, and he's a student of economic history. We're going to have a Bitcoin brainstorm with him, I think, in a few weeks. And what he wants to do to help people like the ones you're talking about, to help bring them along, is he, as an economist, and as I'm going to say, as somewhat new to the topic, he is going to try and poke holes, the holes that all of, you know, the people you're talking to who are not quite on board or not at all on board. He wants to help them understand the cryptography behind it. And he wants to help them understand, and these 5 words, or each one of them is very important. It is the first, global, very important, digital, private, no government oversight, rules-based, that's probably the most important one, monetary system in history. This is a very big idea. And if we are right, and our $25 trillion estimate for all of crypto by 2030 is correct, we think that Bitcoin will account for more than half of that. Right now, Bitcoin is roughly $500 billion in market cap. So 12.5 trillion plus by 2030. Our confidence there is growing, especially now that institutional acceptance is beginning. When BlackRock struck a deal with Coinbase, that woke a lot of institutional investors. And I will say kudos to Cambridge Associates, an institutional research organization. It, in 2018, said to institutions, look, you may not like this thing called Bitcoin, but you better have a good explanation for why you don't like it, because we believe it is the first asset in a new asset class.